happy to be here with all of you today. We're going to share a little bit about small businesses, starting a small business, things you need to think about. My name is Ryan Radecki. I'm a market leader for Bank of America. Been with the bank for about 24 years, and I help lead the Kansas City North market, and I have my teammate Lee with me.
Hi, my name is Leanna K. Hughes-Young. I'm a senior banker. I'm out of the center in Raytown, Missouri. I've been with Bank of America now going on 3.5 years. Thank you for having me today.
All right, so we're going to talk a little bit about small business, and I think that's exciting because everybody here, everybody watching is interested in starting a small business, so that's something that we all have in common. My wife owns and runs her own business. It's actually her second business. She was a beekeeper for a while, and now she works for a company doing research grants for the Air Force. So really interesting stuff, but we'll kind of talk through all the things you need to think about as you're starting your business, and certainly feel free to ask questions at any time. All right, so we're going to talk about just the different elements of business-related financing, such as budgeting, saving, borrowing. So very similar to personal finance, all the same sort of things you would have to consider in terms of expenses and things like that. Very similar to having your own budget at home. All right, so we're going to talk about managing business finances and common mistakes that small business owners make. Hopefully they're making small mistakes. That's the best kind. All right, so budgeting, saving, and managing debt. So again, very similar to personal finance. You want to have a budget, right? If you're not operating from a budget, you can't keep to that budget. And a budget's going to really help you manage your money in a way that is sustainable, right? So you understand how much you need to cover necessary business expenses, and then you understand beyond that how much you have available to spend to grow your business or improve your business over time, which is very important. Obviously, saving is important too, right? Again, same as personal finances. As you're running your business and you're starting to make revenue, hopefully you're able to cover all of your expenses, and then you have some additional income on top of that. You can build up savings. Again, very similar to personal finance. We might save up for a car or a house or a vacation. Your business might be saving up for a specific piece of equipment or technology, something, again, to help your business grow and provide better service to your clients. Managing debt, always a really important piece of finance. Individually, as individuals, you know, it's always going to be less expensive to save up to buy something. Same thing with a business, but there are times where just as an individual, you might need to rely on a credit card to repair your car. A small business might have a sudden and large expense, and so you might have to use a credit card or borrow some money to take care of that. But again, just as with personal finance, we want to make sure that we're really careful with that debt, right? Because it can build up over time, and it creates additional costs. So we end up paying a little bit of a premium on top of whatever we bought to borrow that money. So we want to make sure that we're mindful of how much debt we have, what our monthly payments on that debt will be. So again, we can make sure that we can manage that going forward. So this is a spreadsheet here, and you can see it has the full year. I actually love this view because this is when my wife was starting a business. This was one of the first things I told her to do. I said, let's make a little table here that has the months of the year, and let's start thinking about your income, which we have at the top. So again, very similar to a personal budget you might make at home, right? So any income, whether it's paychecks or maybe you have a rental property and you make a little bit of rent each month. So very similar with a business, but with a business, you're thinking about your sales. So how much are we making in sales? How much money do we expect to make each month in service, and maybe potentially some other income, right? So maybe through partnerships or something like that. And so what you would do is you would fill out this sheet with your estimated income throughout the year. And what this helps you do is understand your cash flow. Again, so you have your operating expenses here, and I love that they specifically list payroll, rent, equipment, supplies, insurance, licenses, telephone and utilities. You definitely need internet, maybe a website for your company, credit card, any loan payments, right? We talked about that. So you want to make sure that if you do take out a loan, if you do have business debt, and you have those payments every month, you want to make sure that's part of your cash projection here. And then obviously advertising. So again, very similar to a personal budget at home. We're totaling up our income, we're totaling up our expenses, and hopefully at the end of the day, we've made more income than expense, and our results are our profit or loss on this bottom line here. And it's helpful to look at it in the context of a broader period of time. 1 month or even just a quarter, 3 months may not be really illustrative of everything that's going to happen to your business. So this has a full year, and right now it's October, right? So we could start in October, but I would always recommend doing this for the full 12 months and working ahead. So every month you add a new month on the end, so you always have sort of a rolling 12-month view of your expected income and expenses. Anything you would add to that?
Yes, I always have my clients, my business clients, do a forecast of this, of when we're opening the account, and then we use it as we're rolling for each month. And then as at the end of the month, the year, we always go back and we track as we're going, and then we have something to look at and see where we can fine tune their business. And it always helps us shave and have a better outlook of their rolling costs and how they can tighten their budget and get ready for the loans.
That's a really good point. If you're doing this on a consistent basis, you're going to get better at it over time, and you'll have a good understanding of your cash flow. Okay, so there's all different kinds of software available. I'm not going to spend a lot of time talking about them, but I think the one that probably everybody has heard of is QuickBooks. That's probably the most common. I've used that. I've seen it used. And it's really helpful to have software that is specifically for a small business. You can only do so much in a spreadsheet. Additional software packages are going to automate some tasks, which will save you time. Also minimizes the risk of errors, and it's going to help you forecast accurately. So, one of the great things about QuickBooks is you can set up regular payments, and that helps build your cash flow forecast that we looked at previously. So having the right software, it's just like having the right tool for the job. It makes it a lot easier.
Exactly.
All right, so just really quick, talk about cash flow, and I'd be interested to hear what this conversation is like with your clients when they're talking about expected cash flow.
Expected cash flow is always, it's not much about how much you have, is what is coming into the accounts and then what's going out of your accounts. So once again, budgeting is huge with our clients, and how much you're maintaining and how much you have. So I'm always telling my clients, always maintain and watch what you have. So that's what we're always talking about, is don't, just because you have a lot in your account, don't go crazy about spending it. Always have what you have, and be frugal with what you have, and be smart with your money. Just don't go wild.
Be efficient. Efficiency is important with business, right? Efficiency means we're spending the minimal amount to get the job done.
Exactly.
Which doesn't always produce the best results. You got to balance those things carefully, but that's part of being a business owner. So you want to manage that cash flow. When you build out your budget and you see what your anticipated cash flow is, and you're updating that over time, it gives you a better understanding of how much you might be able to spend. All right, so I think this really just covers everything we've already talked about, right? Making sure you only borrow what you need, because that increases the cost of whatever it is you're buying. Understanding what your monthly obligation is in terms of paying those loans back, so you can do that on a timely basis. I think this is a great place to talk about credit, because again, very similar to a personal budget, you want to make sure your business is prepared to pay those monthly interest charges and pay back some of the principal. So you're working down that loan over time, but obviously you don't want to miss a payment. No. What kind of effect can credit rating have on a small business?
A lot. A lot of people, I always ask, I'm like, where is your personal credit at? Because we run off your personal credit. And they were like, it's good. Okay. So that's where I always start, because if your personal credit is not so good, or if it's okay. I always want to make sure I'm strengthening that first, because that's what we're going to run off of. If it's not, then I want to work on your personal credit and strengthen it and get it where it needs to be, because that's what's going to make the business credit where it needs to be to start getting the loans and getting the credit cards that we need to make you successful and make that business successful as well. So I always start with that credit and make it where it needs and make you successful as well. So I always start there. And then if it's not, then we take baby steps. I pull that credit and help you strengthen it. And we start, if we have to start with a secure card, we start with secure card. Doesn't mean your credit is bad or anything, but I just want to strengthen it and get you in the best spot possible we can. Now, a secure card can be good and it can be bad at the same time. But you just have to make sure you stay on a consistent path and make sure you make every payment like you're supposed to. And then after that, then you're on a good path. And then you will be successful with your business as well at the same time.
Fantastic. So very important. If you are interested in starting a small business, make sure you get your own personal finances in order first, because that's a important foundation for building your business. All right, we're going to talk a little bit about building business credits. So you just mentioned a secured card, very timely, right? Really good for business, but there are some things to consider. So sometimes a secure card may require a deposit. It may require higher interest. Is there anything I'm missing there?
No, I think I hit it all.
Okay.
Like I said, it doesn't mean it's going to be bad or anything, but we just want to strengthen it. And that's what a secure card does. It strengthens your credit to get you ready for the partial or the unsecured. And that's its job, is to strengthen it and get you ready for a stronger foundation for your credit.
And what does that transition look like? Maybe you've worked with a small business where they had to get a secured card. How do they work towards having just a regular credit account with the bank?
So here with Bank of America, it is 6 months. The bank will watch you within that time period. You make your payments consistently. And then once you are on a good path, then you possibly can switch over to a unsecured or a partial unsecured card, which would be the bank can give you your deposit back and then move you to an unsecured line.
Okay. Right. So just some things to think about. If you are borrowing money, you'll have to provide some personal information. Might have to provide your business plan and financials, a personal credit report. And then some of these things we've talked about within the context of your business, understanding your cash flow, understanding how much savings you have. If you do have plans to expand your business, maybe you want to, maybe you have a coffee shop and you want to open a second location. That's going to involve significant expense or large purchases in terms of equipment, and then seasonality, right? So if you have a snow shoveling business, that's great, but you're not going to make a lot of money during the summer. So you might want to think about that, being strategic and thoughtful in how you save and spend your money with your business. All right, line of credit, pretty similar to a credit card, but here specifically we're talking about small loans, traditional and non-traditional. Can you maybe provide a little insight into that?
With the bank, you have to have at least 2 years underneath your belt. And then 2 years worth of taxes is the main thing on that with the bank.
Okay, so about 24 months before you can apply for maybe a more traditional small business loan. CDFI loans, so these are community development, financial institution loans. I think there's a lot of options available, not only in terms of community development, but also grants and things like that for small business. Are there any resources you would direct maybe a small business applicant to?
I work a lot with, it's called KC Source. They are really big with small businesses outside of us. That's a great nonprofit organization that does help the small businesses get off the ground. It's a great organization that helps you with grants and leaves you with different optimizations that you can see with different avenues to help you build your grants, lead you to people that will walk you through the steps of different sources to get the grant off the ground, what you're going to need for your sources, and different avenues on that aspects of that. So they do help you step by step to get you to the sources to make that grant happen for you. So they do have a 1-800 hotline that you can call and get the sources and get that ball rolling on that aspect as well.
Great. Yeah, I know there are a lot of great resources here locally in Kansas City and probably wherever you live that will provide help finding grants for your type of business. And it's usually not, some people might say, well, I have, a new business or an unusual business, but really grants are available for pretty much almost any type of business out there.
Casey helps with everything. There's nothing that will stop them.
That's awesome. Great. All right, so we've talked about managing business finances. We're going to talk about common mistakes that small business owners make. So lack of planning. We've talked about how important planning is. I'm sure when a small business person comes in and, they're opening their account and they're ready to open their business, I'm sure you probably have lots of questions for them.
I do.
Sometimes they probably don't have answers for all those questions. They're maybe a little surprised that you have so many questions for them.
Yes. The number one thing I see is they're just not organized. They don't have the plan. They don't have a business plan put in place, and they don't have the tools that they need to continue for the next step. That's the number one thing I do see that they have failed.
Yep. If you're not planning, you're planning to fail. So make sure you got a good business plan because that's sort of your playbook that gives you your guide to go out and execute and run your business. So some good tips here. So just, spend some time thinking about your business, what it's going to look like, how it's going to operate, making sure that the business plan is thorough and comprehensive. So again, I think that just means taking time, thinking through your operations, thinking through each and every process within your business and understanding what may be required or what issues you might run into so you can plan and be proactive. And then planning for slowdowns, right? We talked about seasonality. Obviously, I think everybody is familiar with COVID, right? That was a big slowdown for everybody. But things like that can happen, whether it's weather or, health related, all sorts of things can happen. Anything can happen. That's what I've learned.
Yeah, anything can happen.
So you got to be ready for it.
You got to be ready for it.
All right. Lack of research. So definitely, if you're starting a business, you have something in mind, you have a specific industry in mind, you want to do your research and understand, maybe look at some other companies that are already providing that service.
Exactly.
How are they doing it? What issues are running? Are they, take some time to maybe visit their business. If it's a business you can visit and see what they do well, see what they do poorly. Conducting a competitive analysis is usually part of your business plan, understanding who your competition is. If I'm opening a coffee shop right here, that might not be a great idea because there's a coffee shop down the street. There's a coffee shop across the corner. So you have to understand who your competition is, where they are, and how that can impact your business. And then understanding your customers' needs and preferences. I think a lot of the time when people grow their business successfully, right? The way they do that is by listening to their customers, getting feedback and input from them. I know that's why we do surveys, right? To understand
the need.
Yep.
That's the main thing I understood when I was running my daycare 25 years ago. The need changed because I started out as a under the age of 2 through 8 over the age of 2.
Okay.
The need changed. Title I came in, wiped me totally out. So I was like, okay. I looked at the need. The need was infants. So I rearranged my whole entire daycare. I put in sprinkler systems in the house. I put in a ramp. I met the need, what I needed for the state. I looked at it. I was like, okay, I need to put in a handicap, so a way to get the kids out of the house. I need to put in a sprinkler system in my house. Luckily, my dad was a plumber.
Convenient.
Very convenient. Took that cost out for me. That was a $2,000 cost. He ate that for me. And he knew somebody that could put in the handicap ramp. Once again, took that cost off of me. But at the time, it was a tax write-off. I needed that anyhow to take off the cost. So I was fine, but I rerouted the need and I saved my business essentially because they were offering free daycare for the kids. So right there, I just saved myself and I was able to write my own ticket for the babies, and I was back in business and I stayed full for the next 25 years.
Yeah, so that's smart. I love the things you talked about, right? Because we talked about the competitive analysis, but then over time you have to change and adapt to stay competitive, right?
Exactly.
And you need to grow with your customers, adapt to their current needs and wants. I think a great example of that is Blockbuster, right?
Yeah.
Great store everywhere, lots of video shops everywhere, but then the format changed and they went to DVDs, and so they started having DVDs, but now everything is digital. You can't really do that out of a physical store. So there were some video rental, DVD video companies who were able to pivot to producing their own content, to providing content digitally, and some of them are still around. And those VHS rental places that couldn't pivot to doing something modern like digital that everybody uses now, they're no longer around. So
Exactly. So you have to be able to move with the times.
Yep. All right. Something very important is getting support, right? Another reason the businesses fail is because they don't get the support they need. Understanding your community, understanding who your local business contacts are, building your network, seeking out support online. Obviously, the internet is a great resource. You can go on Reddit or small business forums and say, hey, I'm thinking about starting a coffee shop, or I'm thinking about opening a comedy club, and people will, other people who have been down that road before you can help provide a lot of insight. Is that ever anything that you suggest in terms of people talking to someone who's maybe already in the industry if they're thinking about starting a company?
Yes, I tell my clients all the time, networking is the key. Word by mouth is the key. Always push your product out. Without that, you're going to sink, because word by mouth is powerful. Always set a good preference for your company and what you offer.
Yep. Even if they're competitors, it doesn't hurt to be friendly with competitors, right?
Not.
Keep your enemies close.
Yes, exactly.
But they might be able to provide insight, like, who are the good suppliers in town? Who are the bad suppliers? Who's good to work with and who isn't? So some people who you think may not be that helpful might end up being some of your best business partners in terms of your support network.
Always stay friendly.
All right, insufficient funds. So again, we talked about this right at the beginning. Very important that you understand all of your startup expenses at the start of the process. Again, that's just an integral part of a business plan. So we want to make sure you do that. Automate savings. So if you have good cash flow and you see that you consistently have a good deal of money in your account, maybe you can set up a reoccurring transfer into a savings account or some sort of investment, so you can save up for those larger products. Do you ever talk to small business owners about that? Or maybe you help someone start a small business and then you see that they're successful over time. What does that look like? Or how do they start to invest or save those funds?
Yeah, usually if I see one of my small businesses actually starts having the savings, then we start moving that stuff to a savings. And then after that savings starts showing gain, then we start talking about a flexible CD, and then letting that CD, we don't totally tie it down. Flexible CD, you can touch it every 6 days without any penalties. So that's kind of a better way of building that money, and then you get a better turnaround than the traditional savings right now. So that's what we have been talking about with a lot of our clients, consumers and the small businesses. They've been pretty hot item right now. So that's what we've been doing with a lot of the businesses and the consumers right now, and let them get a better turnaround. And then after that, if they want to go tomorrow, then we let them start moving that way. But for the businesses right now, with the way the economy is running, flexible CDs is what we're going.
Certificate of deposit allows you to earn a little bit more than a regular savings account.
Exactly.
It's safe. It's an FDIC
It
insured
is
product.
insured.
Okay. So good place to keep your money. You don't want to have, if your business starts making a lot of money, you don't want it all just sitting in your checking account. That's a risk that I know we see often.
All the time.
we tell people, hey, you don't want to do that, because then if somebody gets a hold of your debit card, you could potentially lose a lot of money. So, and then making quarterly tax payments. This is not, nice that they mentioned this, because sometimes as a business, you have an opportunity to pay your taxes quarterly rather than waiting until the end of the year. And in many cases, that's going to be financially to your advantage to knock that out.
Yes, I like paying quarterly myself. When I had my business, I don't like surprises at the end of the year. So that's why I liked ADP a lot. And we do offer ADP. They took the burden off of me a lot, doing a lot of my back office items. And then they took care of that as well for me.
Awesome. All right, loan mistakes. So we talked about this a little bit. Obviously, understanding all the loan fees and interest, making sure that you are maintaining good credit. You don't want to create a barrier for yourself, right? If you have poor credit, you might be able to get a loan, but the interest rate will be very high. And again, it will end up costing you more over time than if you had just paid cash. Certainly, if you can avoid borrowing money, try to avoid it. And then, talking to your network about securing loans. They may know, different investing organizations, but certainly the banks are always an option in terms of business loans. But it is really important I think the most important piece here is just understanding the actual cost of the loan, right?
Exactly.
Because it's going to increase the cost of your equipment, which is fine as long as you understand that and you have the cash flow to support that over time. Losing focus on cash flow. Yeah. So again, I'm glad we talked about this already, right? We talked about that rolling 12 months, always updating that, understanding, well in advance, sort of your projection. So you can understand whether your income is increasing or decreasing over time. You can understand if your expenses are increasing or decreasing over time, and you can see the effect of those at the end of the day, how profitable or not profitable your business might be. So really important to understand that. And then, we talked about software being really good, small business software, just again, having the right tool for the job, right? So making sure you're not paying overpaying taxes or duplicate coverage on insurance or something like that. Many times that business software is going to help you avoid some of those mistakes. And your network. All right, so a couple of takeaways here. You always want to be managing your business finances, using those tools, making sure that you understand where your cash flow and your monthly balance is going to be. Understanding how to use a business credit card or a business loan. Again, making sure that is part of your long-term plan. Again, there's different ways to borrow money. But there's grants, crowdsourcing, community development loans. So just make sure that you're aware of all the options out there and you're choosing the option that's best for your business. And then making sure that you avoid some of those common mistakes, whether it's lack of planning, lack of research, not managing your finances properly. But if you can overcome those things, and you become profitable over time, then you can start to hire other individuals and they can help you run your business.
Yep.
Any questions?
When you were talking about the flexible CD, I was under the impression that CDs are only for a certain amount of time. You can get like 2-year, 5-year. Is there one that's more recommended right now?
So a flexible CD is it's not a fixed CD. So you can touch it every 6 days without any penalties. So it kind of lives in between the both worlds of a savings and a CD.
Gotcha.
And it takes $1,000 to open.
Gotcha.
Now, a flexible CD will usually have a slightly lower interest rate.
It does.
Right?
Yes, it
but
does.
that's you're paying for the convenience, right?
Yeah, you are.
Okay.
You are.
Any other questions?
But it's really nice.
All right. Well, with that, I think we're done if you don't have any more questions.
No questions.
Okay.
All right. Well, thank you. It's been
Thank
great
you.
talking to you all today.